Luke Holcomb has been in an industry for 20 years, starting as a contractor and now specializes in helping construction companies fix their accounting practices to build more profitable, healthy businesses. Today, we're talking about the foundation of building a profitable construction business and why contractors often end up with so much less profit than what they expected. So thanks for joining us today, Luke.
Yeah, happy to be here. Thanks.
So first question, when it comes to being profitable, what's the number one frustration that you hear from contractors?
Yeah, I think the number one thing I hear is at the end of the year, folks looking at their profit and loss statement, seeing that net income number at the bottom, and then thinking, there's no way I made that much money. I don't have that money in my bank account. And that frustration really comes to kind of understanding some principles of accounting and understanding that your profit and loss statement isn't supposed to reflect the money that left your bank account. It's supposed to reflect kind of the business activities of the company.
Right. And so when you talk about like understanding these accounting principles, what are those core principles that contractors need to know in order to understand how profitable they actually are?
Yeah. And it's not necessarily profitable. Like the profitability bit is reflected in the P&L, but I think when they are thinking, when they're equating, hey, how much money is my bank account? What they're actually talking about is what's the financial position of the business, right?
Right.
Profitability is one thing, the financial position of the business is a different thing, and that information lives on the balance sheet. And so understanding kind of the what I would call like the big buckets of accounting is really helpful. And those would be, the things that folks are used to seeing when they look at a profit and loss, like income, cost of goods sold, expenses, but then it's also things that they're probably not used to seeing that live on the balance sheet, like assets, liabilities, and equity.
Yeah. So how do those translate to the decisions that owners are making at any given time?
Yeah. So most owners, when they go to make a decision, whether it's hiring, whether it's, buying equipment, anything like that, that's a decision they should be making off of the financial position of the company, right? Profitability, when you're looking at the profit and loss statement, if you have low profitability, you either need to cut your expenses or you need to raise your prices, right? That's pretty straightforward. But when folks are looking at these other decisions, they need to look at that financial position. And so looking at that big picture of not just how much money is in your bank account, but how much of that money is actually yours, right? So if you've got $115,000 in your bank account, but you've just taken a $30,000 deposit on a job, that's not really your money. If you owe one of your vendors, $30,000, that's also not your money. $25,000 on the credit card, that's not your money. And so looking at that big picture and really understanding all of that, being able to have that context to say, okay, this is my financial position right now. And then from there, you can make educated decisions. Most contractors, there's kind of two things, right? There's being dumb and there's being ignorant. And I don't think most contractors are dumb. They make good decisions when presented with the right information. But if you're trying to make a decision based on the wrong information, you're probably going to come to the wrong conclusion, right? And that's the kind of you don't know what you don't know bit of.
Can you walk me through these 5 buckets that you talked about for that contractors kind of need to look at and what you would expect to see in each one?
Yeah, absolutely. So we can start in the profit and loss. I think most folks that are watching this are used to that. And so the first bucket's income, right? That's the thing you see at the top. And that's really simple. It's any money you've earned, right? We talked about deposits earlier. That's a totally different thing. And you have to know what you're doing to make sure that that shows up in the right spot. But the income should be any money you've earned. You've performed the work, that money's yours, right? The next section would be cost of goods sold. This should be everything it costs you to actually perform the work that you're doing. So it shouldn't be things that are associated with running the business, but it should be things like lumber, subcontractors, materials, stuff like that, rental equipment. And then you have the expenses portion, which are the things that are associated with running the business. This would be, rent if you rent an office, utilities for the office administration, office vehicles. Sometimes people put sales guys down there, sales and marketing, stuff like that. And then that all helps you understand the profitability part. When you go over to the balance sheet, these are the things that help you understand your financial position. And then you have things like assets. So that's, the money in your bank account, what money is owed to you by your customers, if you have vehicles, things like that. If you've, loaned an employee, an advance on their paycheck or whatever, that's where that would be. And then you have liabilities, and this is anything you owe someone else, right? So that's that trade account, the Amex, the what you owe your subcontractors, as well as the note on the truck, the line of credit that you might have, stuff like that. And then the bottom part of that's equity. And this is the part that I would say more often than not, I see people get tripped up on. And the equity part is going to be anything that as an owner you've put into or taken out of the business. And so if you're in a situation where you are taking, your compensation is just, moving money to your bank account or writing yourself a check or something like that, it's not through payroll, then that's coming out through equity. And so kind of what I see a lot of is, if you buy a piece of equipment, that's cash out of the bank and it goes on the balance sheet because it still has value, right? It's not until the end of the year your CPA will write off a certain portion of that, and that'll, that portion will hit the depreciation, will hit the profit and loss statement. But when you make that purchase, it doesn't show up on the profit and loss. If you pay down the balance of a loan, let's say like you have a loan, you just finished a job, you had some money in the bank, you want to pay off that balance to avoid paying extra interest. Well, that money left your bank account, but it just pays off that balance of the liability. It's also something that doesn't hit the profit and loss statement. And then, like we talked about, if you're taking draws, then that's the portion, and not in the profit and loss either. So if you're looking at the profit and loss to try to understand your financial position, it's not going to have the information you need. You really need to look at the balance sheet. You need to be looking at your assets and your liabilities to understand. I think the easiest way to think about it is the money in your bank account. You have to know how much of that is actually yours at any given time. If you have a good accounting system and a good accounting process, that will be once a month, you'll validate those numbers and have the answer to that.
Yeah. Yeah. When we talked before, you had told me a story about someone who kind of didn't necessarily have all these numbers quite locked down. Can you tell me a little bit about that? Like, what's this real life example of what happens when you don't have those numbers all accurately accounted for?
Yeah, absolutely. So I think the biggest thing that you're looking at here is the questions you're answering when you understand your financial position are not just, can I buy that piece of equipment or can I hire that project manager? There are also questions like, how much work can I perform this year? Right. So as anyone that's done this for a while, that, not everything works out perfectly and timing wise. And so you need some cash cushion to be able to perform work. Right. And so that would be, from an accounting perspective, we'd call that your working capital. And you really need to know how much of that you have to be able to know how much you can sell. And so the example that we talked about, the guy's a close friend of mine at this point. We've worked together for a number of years. And he had a coach, and the coach is a construction specific coach. And I like the guy a lot. I think he's done a lot of good work for a lot of folks. But in this situation, he advised my friend, he said, hey, you just need to sell as much as possible. We need to get that income number as high as we can get it. And so that's what he did. Growing can be expensive. When you take on larger projects, sometimes there's a learning curve, and you usually pay the price of that, with a lower profit margin. Sometimes if you're doing commercial work, the payment terms are longer. And so now you have to take out loans that you might have a profitable job, but you need to cover the cash flow of that differently than you would have before. So you need to take out loans, and those loans have interest associated with them. And if you don't understand all of that as you're going into those situations, a lot of times you're taking loans out when you're already kind of in trouble. And then the people that are willing to lend money to you are not as gracious with the interest rates. And so you could be in a situation where you've paid all the profit of that job has gone out the window in interest. And so what happened to my friend was he grew up to, I think, $7 million a year. as a subcontractor, which is pretty substantial. And he didn't have that cash that's his to be able to support that growth. And so he ended up having to take out loans, sometimes high interest rate loans. When he realized what he was doing, that he was, even though his profit and loss was getting bigger, that he was managing more jobs, had more money coming in, the value of his business was actually going down. By the time he realized that, it was kind of too late, basically. He tried to shrink the volume to make sure that he was increasing the profitability of his company and increasing the value of his business, which is, in some ways the right decision. The problem is that he had taken loans out as a company doing 6 or 7 million, and now he's a company doing 2 million, and he doesn't really have the profit left over as a lump sum to be able to service those loans. And so unfortunately, he's in the middle of bankruptcy right now. But I think it's a great example because this guy's not an idiot. He's not greedy. He's not rash. He makes generally good decisions, and he just made the decisions with the wrong information. And it kind of cost him his business that he'd worked really hard to build over the years.
What if you were advising him at the start of all this, what would you have told him to do differently?
Yeah, it's just focusing on that, growing the value of the business part. It's really easy to get tied up in having, a higher income number, all of that. That's kind of what makes you feel like you're doing really well, is like, oh, I'm doing 6 million, I'm doing 10 million, I'm doing 15 million. But that's not what grows the value of your business. And so looking at that kind of idea of how much money in my bank account is mine and making sure that number goes up every month is what you need to be doing. And sometimes that means that you don't take on as much work. Sometimes it means you can, but that's the number you really need to be focused on, is how much of this money in the bank account is actually mine.
What are some of the areas or mistakes that you see contractors make when it comes to understanding how much of the money is theirs? Like, where are they getting tripped up?
Yeah, I mean, a big one, most, general contractors, things like that, they'll take deposits on projects and they don't handle that correctly. And so instead of being a liability, essentially kind of a loan, like you have the cash in your bank, but you also kind of owe that money to the client, at least until you perform the work. And they don't understand how to do that. And so that ends up on the profit and loss. And now it, looks like, you take a $30,000 deposit. Maybe in reality, you made $6,000 that month. Well, now it looks like you made $36,000 that month. And if you're going to your profit and loss to make decisions about the financial position of your company, you think you're doing great. And, really, you didn't do anything. You just sold one job, you've got a deposit. Now you got to go perform the work and pay the people to do that.
Yeah, that makes sense. What if you were advising these contractors? You do advise your contractors, but what is the one thing that they can do today? Like, what's the tactical, tangible thing that they can go do to kind of start understanding more of their actual financial position?
Yeah, I think, first things first, if they're watching this, if they're looking at resources, if they're actively trying to find this stuff out, I think they're doing the right thing, right? It's the folks that aren't doing that you really have to worry about. But as far as practical steps they can take today, I would say making sure that you're using partners that are dedicated to the construction industry. Construction accounting and construction project management is such a specific niche, and you really need people that not just kind of do it, but that specialize in it. And so whether that's getting your CPA that specializes in construction, an accounting firm, you can outsource accounting, and my firm does that. But you can also do things like getting someone at a controller level. Let's say you have someone in the office that does a pretty good job at things, but you need to make sure that, kind of the big thing, and this is what happened to my friend, is you don't know what you don't know, right? And so finding someone with that specialty and making sure that they're on your team to guide that process for you as you build your company. I think other things that are really clear is, using construction specific tools. So, I've seen people try to use like Asana and Monday.com and Smartsheets to tie everything together. And those are really useful and powerful tools. But when you get to a certain scale and complexity, you need something specific for construction. So crew cost is a great example of that. I'm sure there's other products out there, but just kind of looking back at making sure that you're using that construction specific solution for what you're doing.
Awesome. Well, that was so helpful, Luke. I appreciate your time today.
Yeah, happy to give it.